It's time to define a marketing term. Commodity broker, analyst, and author of Mastering the Grain Markets, Elaine Kub, joins us. She believes, of course, the key to profitable grain trading is building knowledge about the fundamental practices of the industry. Today, she'll help us decide where the best home is for a bushel of grain, whatever that might be. I think this is also known, Elaine, as geographical arbitrage. So how is it that the market, maybe a farmer, decides where the best home for a bushel might be? And let's use as an example sunflower.
Sunflowers are an excellent example because think of it, nobody really in Iowa or Illinois, let's say, you don't see a lot of sunflowers grown there. And part of the reason is that there is no home for them. The actual production of these crops tends to center around the places where there are processing facilities for them. So think sugar beets in Minnesota and North Dakota, sunflowers in North Dakota or Western Kansas. I mean, you have to think about how far away. If you grew a field of sunflowers in Iowa, you would eat up most of the value of those sunflowers just shipping them to Goodland, Kansas, for instance. So there is an example of why you wouldn't even produce something in order to sell it and make an arbitrage.
Because it's simply too far and costs too much money to ship it at that point.
Exactly. But the more common example of geographical arbitrage, finding a bushel's best home, would be to take the grain that's in your bin right now and consider all of the potential buyers that you could potentially take that grain to. And that is an entire universe of buyers. But realistically, for your time's sake, if you're a farmer, you're only going to look at places maybe within a 50-mile radius or within a 100-mile radius, depending on your trucking opportunities. So now you've narrowed down the list, and now you're just looking at their bids, and their bids are going to depend on what they're doing with them. So some of your buyers might be loading it onto rail and sending it to cattle feeders, let's say. Some of your buyers might be loading it onto barges, particularly if you're in Illinois, and that is really affecting basis this month. The trying to predict what's going to happen with river freight and sending that down to the Gulf for exports. So there's a number of directions that this goes, and it's a decision that every farmer makes for his individual bushels, and then it's a decision that the commercial companies make, whether they should be sending this to the Gulf or the PNW or to domestic users.
Well, let's say that the owner, whether that be a farmer or a elevator, has the grain in their bin. What are their decision processes to decide geographically where to ship or sell the grain to the next owner's hand?
Yeah, we talked a little bit about some of this last week with the carry. So first decision you need to make is when you're going to move it. Let's say that somebody has decided he wants to get some income right after the first of the year, so you're going to move it in January. Your next step is to look at all of your potential buyers and then just make the decision based on price. So all of the buyers are going to have a different basis bid, and then you just back that basis bid off from the present futures price, and so you can compare each of these prices exactly according to their basis. Then maybe you just pick the buyer whose price minus your transportation costs to that buyer, however far away they may be, it gives you the most value. But on the other hand, sometimes it's not that easy because sometimes farmers are also going to be taking into consideration how long the lines are. Are they going to end up sitting in line at an ethanol plant for 2 hours? Or how quickly does the buyer pay? How well do they trust the counterparty risk of that buyer? So it's not always just a pure price decision, but it certainly can be done. You can make a matrix of the various prices that are being offered and then back off your transportation costs to get a pure geographical arbitrage.
Can you define counterparty risk for me since you brought it up?
Well, in this situation, I'm talking about would you take your grain to somebody that you feel might be going bankrupt in the next 3 weeks and maybe won't be able to write you a check? So that's when you're talking about finding a good home to sell your grain to, that's the counterparty risk you're worried about. If you deliver the grain to them, will they be able to pay you? And by and large, the answer is yes, but sometimes people have gotten into trouble.
Elaine Kub is the author of Mastering the Grain Market. She's a commodity broker and an analyst. Today, she helped us to determine how to best decide the home for a bushel of grain. I'm University of Illinois Extension's Todd Gleason.